The broadcast is now starting. All attendees are in listen-only mode.
Hello, Face. Hi, everybody. How's everyone doing today? Hello, Kevin, Patrick, Glenn, Ziggy, Zia. Everyone doing okay? I just have a few things to cover before I pass it over to Blake. Talked about early this week, there could be an ABC to 3.5 in USD CAD. I noticed on Twitter that Hardianto and Dan Norberg participated in this. It's my view this was a selling opportunity. We got to 47.5. I was talking 50. You probably say, oh, I missed it. I don't think so, because there's still plenty left on the downside. Could we rally one more time? Sure, everything and anything can happen in FX trading, but this looks like a pretty simple ABC, and we should be into a continuation move, but you can't rule out maybe one more push up. Max I see is 4, but that's becoming less likely. I'd like to know if Luca's in the house. Luca, are you here? Give me a Y if you're here. Okay, Luca, I want to congratulate you and Blake Morrow on your entry yesterday in the gold. So it was over a month ago that when gold was getting killed, and someone asked me when I thought it would bottom, and I said, I think around the summer solstice. Yesterday was the summer solstice. We saw this little 3-drive formation down here. Luca took it. You got a nice lead, buddy. Nice entry. Congratulations. Everyone congratulate Luca. Great trade, buddy. And this may end up being the low, okay? You're getting a nice looking week now. We only have one more day left in the week, and I'd like to see it close higher on the week. So, nice entry. At the worst, it's a profitable trade. At the worst. Let's get to the majors real quickly, and then I just have one more thing to say about the bourses. I still think there'll be better buying opportunities in Euro. I still remain negative. I think we're going to trade under the 111 handle. The pound is starting to shape up for a 3-drive here. Okay, maybe we get one more shot down in the pound. Here's your little cleaner on the 4-hour. See? 1, 2, 3, take a picture. That's going to come in under 26, maybe the 5.5 level. And I wanted to cover the bourses. To me, everyone knows that I'm a big believer in shorting the relative weakness and buying the relative strength. And my view is that the FTSE is the weak sister in Europe. There you go. So here we are. Last time we came off this moving average, we had a pretty good rally. Sold all the way back to it. I don't think we're going to see this type of strength from here. Maybe a possibility back to 74.80, but underneath today's lows, there's air pockets. I think air pockets all the way down to 72.80, and a possibility viable for it to trade all the way down towards 7,100. Give me a Y if you're with me and you see the analysis. So compare FTSE to the DAX. DAX higher. Okay, Japan's even stronger. But the FTSE seems to be the leader of to the downside. So, you know, much weaker than U.S. bourses, except for maybe the NASDAQ. NASDAQ looks like it's just consolidating. This was impulsive, and I wouldn't be surprised if we're about 61.8 back here. Let's take a look. Call this low. Yeah, right at 57.94, 68, 61.8. So that's all I have for today. We have a great guest. I know you guys are going to stick around because it's a woman. Okay, so I'm going to be interviewing at the top of the hour. It's Anna Kozin Nasser. And Anna's handle is @femaletrader_A. So it's going to be interesting. She doesn't have any axe to grind. She doesn't have a website. But I thought it'd be interesting to hear her journey. I think her Twitter account says, "I'll trade anything that moves." So that's definitely the mind of a trader, trading anything that moves. So everyone cool with what I said and get it? Congrats to Dan and Hardianto for buying the Canada and catching this little bear market rally. It's my hope that people took some of the numbers that we've been talking about, sales between 3 and 3.5 for over a week now. So the fact that Canada sold off from those levels should not be a surprise to anybody. I think that face was prepped for Canada. You agree with me that you guys had plenty of time to think about it? It was prepped pretty good for gold. I know Steve wanted more confirmation. Maybe he's going to start to get some. And with that being said, let's see if Blake Morrow's in the house. If not, I'm going to pass it over to Steve.
Good
Blake
morning,
is
David.
not. Hi, Steve. How are you, my friend?
Fine. I'm okay. A little bit sleep deprived, but other than that,
Yeah.
fine. Blake is
Okay.
not with us yet, so
Okay.
probably then I should start and we can go over a couple of things.
What do you think about my earlier commentary? Any refutation or concurrence with what I'm seeing?
You know very well that I have been monitoring the FTSE, so I'm totally with you. I mean, if you remember, your best observation was actually that this head and shoulders formation that I had pinpointed some time ago might end up actually being the head of a bigger head and shoulders formation. Of course,
Yeah.
we have more, we have more way to move until something
Yeah,
like
we
that.
got to take under today's low. It's, to me, it looks like Wile E. Coyote on the cliff, sitting on a cliff of the 50-day moving average.
Yeah,
Or
and
is that
looking at the abyss below, right?
Yeah. So is the ledge going to crack? Maybe it tries to rally and we get some type of fib move that from 560 to 370.
Perhaps, but the formation is, I would say that the formation is
Heavy.
rather clean, yes, and it doesn't look good. I mean, a daily close below the low that we had like a few days ago last week, 76. Is probably very, very bad news for whoever is looking to trade on the long side. And
I don't know about you, Steve. I was always trained to look to the UK for leadership on almost all monetary events, market events. I was always taught the FTSE leads our market. And, the FTSE could be a precursor to what might happen here in the U.S. And, last time, like during the Brexit, last year, it made hay with the pound under pressure. This time with the pound under pressure, it's not making that much hay.
yes.
So, I mean, that's a different,
very accurate.
very different action.
Very
So-
accurate because,
Hey, gentlemen.
hey,
Oh, sorry.
Blake, welcome to the party.
Hi, Blake.
I had to take a phone call, so
Okay,
I'm running
so
over.
then take over because you have limited time and I'll take it after you, mate.
So you guys talked about the FTSE.
Yeah, I had been showing the FTSE since a couple of weeks ago because it has a head and shoulders formation, and then actually earlier this week, if you zoom out, Blake, you will see that Dale made the following notice, which is really cool, that not only we have a head and shoulders formation currently, but that this head and shoulders can actually evolve to become the head of a bigger head and shoulders pattern. I bet you've already seen it now.
And Blake, nice entry on the gold. You bought it on the solstice. I was joking around a month ago, and someone said, "When do you think the gold will bottom?" I said, "The solstice." And it was a real nice little 4-hour 3-driver down there. Luca caught it, and it may end up being
Nice.
low.
Yeah,
Yeah.
Blake, it's not.
I've gotten in and out of gold already. I'm actually not in it at the moment, but I don't mind getting back in it. So.
All right.
So Blake, besides the wedge you're seeing there, if you zoom in a little bit closer, you don't need to go to a lower time frame. If you zoom in a little bit closer to the recent peak we had, you'll see that it's actually a head and shoulders formation.
Yeah, like this one right here.
Yes, exactly.
Yeah. I mean, we got a wedge. We stalled at the 127% extension. Looks like a good short from here. Actually, you can look at the FTSE here. I mean, I'm also looking at the S&P. I mean, the S&P is sitting right on support. I mean, this is really very, very. I think bulls know this too. I mean, this is very. Key support for even the S&P. I mean, you can see the S&P. We're actually trading below this trend line here, and we had this false breakout right here.
And we're holding the 2-week off number, which I showed yesterday, 2431.10. So if by tomorrow we close under that off number, it's a weekly signal.
Okay. I'm not really following you too much. However, I would think that because I'd have to see what you're talking about. I just think that we have to trade it into multi-day lows, down here, for us to be bearish near term. I've got a short on the S&P right now, very small. Actually, I can't say it's like super small, but it's right around here, and it hasn't been going anywhere all night. You can see it's just we've been sitting around here. What's interesting though is we haven't had any type of rally, and you're seeing gold move. I think you got to keep an eye on VIX again. VIX is consolidating pretty tight. I know we were kind of paying attention to that yesterday.
A breakout of that triangle, Blake, takes it up to just a measured move up to that 15.5 resistance. And that would be considered, if we broke out over that double top, a pretty significant risk-off signal.
Oh, so, God, yeah. Yeah, I 100% agree with you there. I mean, if the VIX, if the VIX makes a break for it up here now, we start getting above 15, 15, 16. I mean, that's you got to be bearish risk at that point in time, no doubt about it. A couple other things. I'm short the dollar right now, and I'm long the euro, and we had this break from the triangle yesterday. I don't know if you guys caught that.
Yeah, that was a good call.
Well, it hasn't really gone anywhere. I mean, it seems great for right now, but I'm only really up like 10 pips on my average. So.
Yeah, but I think I saw on Twitter that you said it was the middle finger formation about to happen before it broke out.
Yeah, that was really good timing. I mean, I have to admit it. I tweeted that, and like literally 5 minutes later, it ripped. I mean, it went from it did this move. Right there, it went from 11, and I owned it at like 11.50, and I go, it's about ready to give you the middle finger formation, and all of a sudden it went ripped up like 15 pips. It was some kind of uncanny timing, I have to say, but it just felt like we were wedging up there. But anyway, I'm long some euro. I'm short some Norwegian krona, and Steve, did you talk about this? I don't know if you ended up talking about it.
No, I didn't have the time actually. And you know something, Blake? I think you noticed. Actually, this is really funny. I mean, this is a real ForexAnalytix confluence. Yesterday, right after the webinar, I actually went short USD NOK, and later at night, we had a discussion with Blake, and he's like, I'm I'm long USD against that and NOK, and I'm like, really? You're also long against the NOK? And he's like, yeah, I am. And then we have a discussion with Greg.
Short, long the Norwegian krona.
Yeah,
short,
sorry.
short.
Yeah, against the dollar. Sorry, my mistake. Yeah, sleep deprived, as I said. And then we
Yeah.
have a discussion with Greg, and we find out that he's also long the NOK against the dollar. So we're all long the NOK against the dollar without prior, having any conversation about it. We just found out, later on.
Right, just through our normal discussions.
Yeah.
And Steve has a channel, and I'll let him show you what he's looking at. But I just noticed the rejection of the 618 retracement. It was a pretty, in my opinion, pretty key rejection. We're testing the underside of this trend line, and I knew that the euro was breaking out, so I'm like, okay, well, I don't mind being short the U.S. dollar, Norwegian krona as a result. And I knew that the Norges central bank was going to meet, and you guys have heard me say this. You guys have heard me say this probably like the last couple of weeks. Central banks are going to start shifting and to normalize rates, and this is an example of the Norges central bank who's dropping their dovish rhetoric, and so the U.S. dollar Norwegian krona had a really good rejection. The good news is what your risk is now. I mean, the risk is above this 856. I mean, that's it. It's when you can define your risk like that, that's the most important thing. So,
I know that Canada went into your sell zone as well, Blake. Do you have a hesitancy to short it because of your bias of risk off possibly occurring in the indexes? Is that
okay, so I'm glad you asked. I was actually short the US dollar Canadian overnight, and I shorted it because we hit the 200-day moving average yesterday, which if you use ForexAnalytix, yesterday, I mean, I'm talking about everybody else.
I thought it was a trick question.
No,
I use it. Everyone raise their hand if they use it.
There you go. So it says the U.S. dollar Canadian got rejected from the 200-day moving average at 133.30. We have to note that the rebound has been strong, but that doesn't change the fact that that only a break above 134 changes the technical picture. The 200-day moving average was a big, and we were right there, and so I started selling into the 200-day moving average. Now, when the Canadian data came out better than expected, when the Canadian data came out better than expected, then I closed it out right around here. Actually, I took it off right at this price, 58, I think. Now I've got an order to sell it if it stages a recovery. I just don't know if it's going to stage a recovery today. I overall, I'm pretty bearish the dollar Canadian. I am a little worried if we get some risk off, as you pointed out, Dale. I'm a little worried that it could find a bid, but at the same time, crude oil's been really beat down, and crude, I think, is going to find some sort of base around 40. Whether it's right here at 42.75, or if it's going to be at 42, I don't know, but I think that crude's going to try to find some sort of base. So, and overall, I think the dollar Canadian is a short. I am worried a little bit about risk off. So that's true. And I do have a little U.S. dollar Swedish krona. This is the U.S. dollar Swedish krona. I'm short a little bit of this as well. We've been rallying and kind of testing previous supports. This is a big, in my opinion, this is a big zone. So, keeping in the theme of I should go all the way up here, of being short some dollars. I shorted some U.S. dollar Swedish krona alongside some euros. So I'm just, I'm trading that. I'm taking some profits when I can, because I was long the Aussie New Zealand, or actually I'm still long just a little bit left now. That hurt. It zapped all of my profits from yesterday. So, it's kind of a bummer that the Aussie New Zealand did that. But the Aussie New Zealand looks potentially broken. We don't want to close below 104 today. You know, we have this big trend line that comes in. I really don't want to see it below 103.50 really, but you know, the Aussie New Zealand,
and
you know, might have a bear flag formation.
Sorry to interrupt, Blake, but even from an Elliott wave perspective, if you see, it's a clean A, B, C. So the pattern at the moment, now that we're in new lows, seems clearly correct. Even the overlapping nature of all that price action we had also is a testament to that.
Yeah, so you know, I'm a little concerned that it could fall further. That's why I don't want to hang around if we don't close back above like 104. We got to really get back above 104 by the end of the day. So it just kind of, you know, depends. I'm not married to it anymore. You know, the Kiwi has been very strong. One thing that would worry me about anything being short the Kiwi is if the Kiwi gets above 73 cents or 73.20, because if we get above 73.20, the Kiwi is going to be in rally mode, you know, regardless of how you know, feel about the New Zealand dollar. And that to me is probably the biggest concern, is if the Kiwi starts to break out. Although I do feel that the dollar overall is going to come under pressure. You know, and you know, the iron ore has picked up a little bit, copper's picked up a little bit, the Aussie could bounce from the 200-day moving average here. You know, we could see overall US dollar weakness, you know, with the euro rallying, the pound rallying, the Aussie rallying, the Kiwi rallying, blah, 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 blah. You know, and I can't rule that out. You know, I can't rule, you know, just an overall US dollar weakness spell. And if that happens and the Kiwi breaks above 73 cents, I got to see what the Aussie's doing at the same time, and the euro and things like that. And so, you know, with the dollar Canadian, just going back to the dollar Canadian, that's why I took profits off the table, because I had to book, and I booked some really handsome profits being short the dollar Canadian, but it's also compensating for some other losses that I took, you know, because it's been challenging the last 2 days. I mean, I made a lot of money yesterday, and then I've given back a lot of money today. So
we have Blake, there's a question from David Hooper, and I'm sure a lot of people think about it when they hear your commentary, because you're a scalper. I mean, you position, but you also, like you say, trade around your position. Yeah. And David is asking, just heard Blake is out, I believe it's regarding gold. Is he not trading the active patterns identified to their targets?
Oh no, I'm trading the active patterns, and but see, if I trade like I put in a pattern in play, and the reason why I put in a pattern in play, like for gold right here, is because I'm looking at it pivoting off the 618. So just because I happen to be out right now doesn't mean that I'm not bullish. I am actually very bullish gold. So what I do is, if you understand trading at all, then you know that nothing goes up and down, you know, in a straight line. So if you go to gold and you go, okay, we got a nice pivot off here, I just took profits. And then if we get a dip, maybe like, you know, a 3-4 point dip, I'm going to buy it again, because I expect it to move higher from here. So just because I happen to exit near term is just because, you know, a lot of it has to do with where I'm at right now currently for the month and the quarter. It's like I'm more apt to take some profits off the table, and, you know, just to book profits, you know, to compensate for some losses, but doesn't mean that I'm not bullish, you know.
So and therefore, like the active patterns, they're good, but how you trade it is not in cement. And we're all captains of our own ship, aren't we?
Absolutely. I mean, you know, like for example, I'm bullish the euro. I think it's going to, you know, I think it's going to break above 114 eventually. So, but does that mean that I'm going to be long the euro and just stay long the whole time? Probably not. You know, I'm probably going to buy it and sell it at 112.10, and then try to buy it again at 111.80, and then, you know, sell it again at 113 when it gets up to resistance, and then try to buy it again on a breakout, you know, and that may be elongated over the course of the next week or two. So yeah, I mean, I trade my whenever I post like a pattern in play, the initial trade I'm usually in, and then I trade around it. And so it just depends. It depends where I'm at. You know, a lot of times, like if I'm, you know, give you an example, if I'm down 10 grand for the day and then I'm up 5 grand in a gold trade, I might book those profits and then, you know, look to get back in, you know, just to compensate for a loss. Or if I'm, you know, if I'm up 20 grand on the day in a bunch of positions, I'm like, man, that's some nice profit. I might book part of it or maybe even all of it because I'm like, that it's not going any higher today. And then I'll just look to rebuy cheaper. So I do that all the time.
Money management,
yeah,
and it works for you. Yeah.
Yeah, I mean, you have to do it. I mean, when you trade, it's imperative. You know, some people will just stick with a position and just, you know, stick with it. You know, because you're looking for much, you know, maybe like a really big turn, like the Aussie New Zealand. You know, I've been trying to buy that thing around 104.50. You know, thinking that, hey, we're heading towards, I want to have a big position because if we go through, you know, 105.50, it's going straight to 108. And it didn't pan out that way, you know, through the data. So it just depends, you know, it depends, you know, how I'm feeling and what I'm doing and, you know, what I'm trying to trade at that moment. So, yeah.
Okay. You have David satisfied with the answer.
Last question, and then I got to get out of here for the New York Open. So what's up?
Okay, last question. Luca is asking, isn't it puzzling that UJ is not really responding to falling U.S. deals, not yet at least, below 110.60, a good short in your view?
Yeah, I don't know. Well, first of all, I think that everybody, you know, sees that the S&P is on really key support. So I think in order for the dollar yen to really start breaking down, you're going to have to see a rally back in bonds, you know, yields dropping. You're going to have to see stocks really fall. I think, you know, people that are looking to sell, you know, they may be long the dollar yen. They're not going to pull the plug on it when the S&P is right on support. So they're probably looking at it going, okay, well, as long as the S&P can hold up, I'm not going to sell it. You know, correlations do come into play. And so right now, I think, you know, now I looking at the dollar yen, I don't know. I have no idea what to do with the dollar yen right now. I mean, you know, maybe if it gets below this, you know, 200-day moving average, maybe that's a trigger. I don't know. I mean, I just don't know what to do with it. I don't have any solid feeling, and it's okay not to have a good, you know, feeling about a currency. And right now, the dollar yen is not doing anything for me. I mean, like,
you're strongly neutral here.
Strongly neutral, right?
Oh, okay.
Right. So, anyway, all right, guys. Well, hey, Steve, I'm going to pass it back over to you.
Okay,
and you guys have a good trading session, and happy Thursday. It's almost Friday, thank God.
I have a great interview today, Blake. You're not too busy.
Yes, I'm gonna try to listen in. It's a female trader, right? I don't know who she is, but
yeah, and you'll like what where her heart really is. I'll show it at the end of the interview.
Awesome.
That's my tease.
Awesome. Okay, we'll do.
Okay, buddy.
Thanks,
Thank you, Blake.
Thanks, everybody.
All right, Steve, you've got the floor, buddy.
Okay.
My co-anchor, Steve Balgi. I turn it over to you, my co-anchor.
Thank you, mate. So let's have a look of a couple of things here, right? So one of them is, Blake already talked about the USD NOK. I can actually give you an explanation why Grega believes that it's a short, why I do believe it is a short, and why Blake believes it is a short. He already explained for himself. He liked the rejection. This was a very nice rejection. I mean, we built a tweezer top with the second candlestick of the tweezer being a shooting star, actually, which, you know, enhances more this view yesterday. I'm also seeing a channel here. You can also very clearly see an A, B, C correction, while you can easily identify that this move lower from the ascending wedge was impulsive in nature. If we take it to a lower time frame, you will clearly see that this is a 5-wave move down. So we got a 5-wave move down after an ascending wedge at the top of some very long-term resistance, and a correction that is clearly defined as a 3-wave, and a rejection from the top of the channel. So all the elements were here to take a short. So Blake and I are short from almost the top. I mean, from 855. And I think that the risk reward is still there because, as Blake said, the risk reward at least now is very clearly well defined. It's above the high that we got yesterday and the day before yesterday. Now, adding.
Karad would like to know where your head's at on Euro Kiwi and Euro Aussie.
Sure, we're going to have a look at it, but let's keep things in. In groups of correlated items. Adding to that is the fact, if you remember some days ago we were around here and Blake was saying, somebody asked Blake about oil, he said, oil is bearish, I mean the move down is bearish, etc. Now at some point of course we're going to have some rebound, and I actually interrupted him to say that, for me a key level is the area around 42.50. The reason, if I zoom out, you can see it here. This is the area, you see it?
Yes.
So we also have this channel. It's not the prettiest channel, the red channel that you see here. So I have a confluence of supports here, and needless to say, a seriously oversold instrument. Now, is that enough to call a reversal? No, it isn't. To begin with, we have a spinning top today. And, I'm still monitoring. I don't think that I will get long oil outright, but what I'm going to do, if I also see serious elements of an oil rebound, is that I will probably increase my exposure to USD NOK and get involved with USD CAD as well, because anyhow I like their technicals to be short, and definitely a decent rebound in oil is going to help them somewhat, at least somewhat, especially USD NOK. So this is also what I'm monitoring in oil at the moment. Technically, for the time being, the picture is very clear. I will be very happy if I see a rebound from here, because it will mean that that this confluence is of value, and then I will be looking for at least a retest of the 45 to 45.50 area. But we can have this discussion after we actually see a rebound manifest. So, what did you say? We want to check out.
Karad was asking for Euro Kiwi, Euro Aussie.
Sure. Let's check them out. Euro Aussie. Actually, we had the 4-hour view yesterday. If you see the 4-hour chart, Euro Aussie has broken above a descending wedge. Even if I draw it here, it's not going to be so pretty. One of our friends actually noted that yesterday, and I immediately drew it, and he was actually very right. So this is the wedge roughly that you see here. So I would have to say that this is a bullish development, but it's a first step, right? I want to see what kind of a reaction we're going to get from here. But this is definitely a bullish development.
And it could also be that we completed A down and we're going to get a B up towards maybe 150.
That might be the case as well, but even if that's the case...
And then we get a C down, and that's the position long. This is a trade.
You're absolutely right, but still, since even a correction in the... You're talking about a scenario of an A, B, C. Even in this case, since we're clearly still at A, higher, a retracement to around 147 will give us a well-defined risk reward with the stop loss being below the low, which is at 146.20. And
I was talking about the break from 152 to 46 being A, and not the form of B. That we could get a B back to 150.
No, I'm just enhancing what you said, and I'm saying
I see. Okay.
If we get a B to a potential B that you're talking about, to a larger B, Still, the risk reward at a dip to 147 is good to go long, and then you will have a risk below the low that we got on the 20th of June.
I see.
And you should at least expect another leg higher. So then you can see how this unfolds, and if actually this was all the correction, or the case is what you're saying, that this is going to be a B of an ABC corrective move lower that can perhaps in this case take us to this very interesting zone, which is the zone around 144.50. This is what I see here with Euro Aussie. Now Euro Kiwi, almost made a break above this descending channel, but it proved to be false. We can even redraw it just a little bit, because sometimes you have to adjust a little bit your lines to match the price action. So things with Euro Kiwi are quite simple. I can see levels. I can tell you as a fact that it's more than obvious that it now wants to fill the gap, which is here at the area I've marked, which is, let me actually draw it. So we have a gap here.
Yeah.
So I think that it's now very likely that it will want to fill the gap, even perhaps test the 200 DMA that it's here. So we have more zones of interest here before higher. The sure thing is that as long as this descending channel holds, there is nothing bullish. I mean, we made some attempts. Yesterday's candle was a nice beginning, but that's why you don't go outright long just by seeing a single candle tell you that, oh, this thing might be turning. That's why I'm always monitoring for confluences, and I didn't have the confluence of a clearly broken descending channel, for example. So I think that Euro Kiwi can bring a little bit more downside. We'll see how deep that's going to take us, perhaps to the 61.8, perhaps to the 200 EMA, perhaps a little bit higher just to fill in the gap. But around here, around this circle, 3 different areas of interest, and as always, we also need a trigger. We also need, a strong reversal, a strong candlestick reversal that's going to tell us, okay, now we have also a short-term signal, and then we can talk about it again. But for the time being, I see nothing actionable. I'm pretty sure that we're not far away from that. I mean, from seeing reversals in Euro Aussie and Euro Kiwi for at least a very decent rebound higher. So I'm pretty sure that very soon we will be able to talk about them again and have something more actionable. Euro CAD, by the way, I'm still short. Nothing has changed here. I saw the rebound yesterday. I was a little bit worried, but as long as we remain below this zone, I wouldn't take any profits. I mean, I have no reason just because I saw a strong day, and in this case I was compensated for waiting. Some other times you just lose some of your profits, but nothing has changed. I mean, at the very least it might be an A, a B, and a C. I remain bearish, I remain short, and I'm pretty happy with it. I mean,
I have sharply lower targets there, Steve.
I'm with you.
The gap for sure. And I wanted to ask Gio, 40.50 next stop. Are you talking Euro Aussie, Gio, and these? And then there's some questions on Kiwi, Euro Aussie, and Kiwi yen. But okay. Gio, I'm not sure. I think you're talking about Euro Aussie. So I'm trying to interact with the community.
And while you're doing exactly what you should be doing. I mean, thank you for.
Oh, oil. Okay, oil. Gio was talking about 40, below 42. We're going to 40.5 in the UN. Thank you, Bart. Thank you, my trading warrior brother.
Below 42, the next resistance, the next support I have is at 41.50, which is the 127 extension of this prior move. We can also pinpoint other levels of interest, but you know something, Dale? I'm going to start measuring more precisely once I see a break below here, because for the time being, all my focus is, I was expecting this zone to come into play for some time, and now that we're here, it might be just, that I'm biased because I was monitoring that for some time. But I believe that the chances of a rebound are quite strong. So let's see what happens from here, and we can talk tomorrow for more downside targets.
I have a question for you. Yesterday when we had that 3 drive and Luca was buying gold and Blake was long gold, you said you needed more confirmation.
Yes.
We're up about $7 in gold. Is it starting to shape up in your view?
I like, my view is that I like silver more again.
Okay.
I like silver more, and I see the price action that I see here today, and I might get involved again. I want to see what will happen today. To perhaps get once again involved. So I'm gonna let you know tomorrow at the same time if I'm ready to actually do something with silver. But between
and if this turns out to be a major low in metals, do you think you'll add, looking at the change of season, to your trader toolbox to be alert for reversals into equinoxes and solstices? Can I convert you to looking up at the sky once in a while, Vogie?
You can convert me to looking up in the sky if it has anything to do with astronomy and cosmology.
Okay, that's astronomy.
Not astrology, though.
Okay. Gemini should be, the other side of you should be open to it. Anyway, I'm going to...
Probably, a lot of involvement with...
do you think Gann was an astrologer or a mathematician?
Gann?
Yeah.
Astronomer, most probably, you mean?
Okay. Well, he used planets, so and time, and so I was curious if you thought he was like an astrologer.
No, I very much doubt that.
Okay. Okay. He was too good just to be an astrologer, don't you think?
I'm not aware of the specifics of his life.
Okay.
But I doubt that, especially, with his mathematical background, he was an astrologist as well. Astronomer, along with mathematician, very likely. A lot of people involved with sciences that have basis of mathematics are also mathematicians in nature. Like, being physicists, being astrologists, being cosmologists, etc., etc., etc.
Yeah.
I'm monitoring them. Yes, we're seeing some good reactions from here. I need to see what's going to happen today as well. So, personally, I'm not 100% on board yet. I'm not.
Okay.
As I have to tell you that I'm not on board yet with the idea that Euro USD is breaking higher. I don't like the fact that it's slow to break below here. But on the other hand, if I had to choose, I would still go with the short side for at least one leg lower from where we are.
It's giving people too much time to buy the 111 handle. Okay, 111's important, but I'm going to give you 1, 2, 3, maybe 4 days to make up your mind.
Yeah.
You know what I mean?
Yeah, I agree with you. I'm not super convinced, and I know that things are a little bit mixed, and the reason is, I also mentioned it yesterday, the reason is that after the Fed decision, the dollar is extremely conflicted. And when I say the dollar, obviously I mean the traders that are trading the dollar and all the instruments that are highly correlated with it, like treasuries, etc., etc., etc. I mean, they're very conflicted, and I think that we will need to see one more catalyst. I don't know what that's going to be. We will have to find out.
Yeah, it's kind of like Mr. Market, saying, Dale, I know you had hemorrhoids and you weren't thinking clearly, so I'm going to give it, because you didn't buy it at 111 on Monday, maybe you're feeling a little better today. I'm going to let you in at this price. That's the way I look at it.
Yeah, and if you look at it, you know, from looking at the 10-year Treasury as well, you see, I mean, we've actually spent so many days more or less going nowhere. We're just oscillating, you know, around the range.
Yeah.
I mean, in essence, we've been in a range since the beginning roughly of June, and we're almost at the end of June. So we've spent a couple of weeks like chopping around here. We've had like a big candle here, but other than that, we're just chopping around. So you know, we need to see some decisive move to get us going, and then we can be more convinced in the moves. And that is why you see so much divergence between different dollar pairs. I mean, there are dollar pairs that you can be outright bearish with them, as we've mentioned some, and there are dollar pairs that you might even consider being bullish, and some others that you're like, nah, you know, I'm completely neutral with what I'm seeing here. And the reason is this, you know, the market is very slow to take a decision here. We definitely need one more catalyst. We'll see what that's going to be. But I can tell you one thing for sure. I don't think it's going to take much longer. Something soon is going to happen, and then we're going to see some acceleration of the dollar move, and then more conviction is going to flow in the market, and that is going to draw more funds one way or the other, one direction or the other, and we're going to start seeing some solid movements again. That's how it works.
Okay, buddy.
Aussie Kiwi. Aussie Kiwi, yeah, I briefly said that I think it's more than obvious. If you remember, I said plenty of times that I'm not involved with this. The reason is that I don't like it. It's often slow. I can tell you now in retrospect that there is absolutely no chance that this was not a corrective move, not because now we are in, you know, we've registered a lower low, but simply look at this. It's an ABC, and besides that, look at the insane amount of overlapping. You don't see this kind of overlapping in impulsive moves. This is an impulsive move, for example, a leg of an impulsive move. Do you see that kind of an overlap? No. Boom. This was an impulsive move.
That's why I was thinking 102.
Yeah. My next support, I had shown that some time ago, which was actually my main support, but then
Yeah,
Nick
102.
indicated that one, you know, for Fibonacci reasons
Yeah.
as well, and they said, yes, of course it might work, was this. We have the low here, the low next to it, the low here. So I now have a support here at above, just above 103. So, you know, this is the line in the sand. It also coincides with the low that we had here at around 1033, let's call it. So if we don't find support there, then the next support is the low here at 1023, etc., etc., etc. Personally, I'm not involved. I'd rather trade things that are not so correlated with each other. I mean, for example, let me give you an idea. I've traded in the past sometimes OZK when it was extremely oversold, and successfully, but that was just exception. It reminds me of pairs like Swiss franc with the yen, which on occasions it was completely, you know, unmovable. I mean, I usually avoid those kind of charts. You know, I'd rather get something that produces cleaner moves. Now about the other instrument that our friend asks here, pound Kiwi, yeah, I'd gladly have a look at, and since we're mentioning it, let's have a look at both.
Canada's getting hammered down 90 pips now.
Let's see, now that you mentioned it.
Goodbye 130 handle.
Yes.
In the upcoming days.
Yes.
Gio, you're an excellent trader. Glad to have you part of FACE.
Yes, here it is.
I have a question for you, Gio. You don't need to be here. Why are you here? Just curious. You know, because we have a lot of professional traders here that it's not a hobby for them. This is how they support themselves and their family. I think I know the answer, but I'm curious what your, Luca, you too. In fact, there's so many, I think at least 30, 40 guys in here that I've known. Okay, so you like the company, it's intelligence gathering. That's what I use it for. Okay.
So the Loonie,
Yeah.
first of all, clean ABC price action, almost equality.
Yeah.
You can see it because you see that it channeled almost perfectly. I didn't like the Morningstar formation, but it has obviously failed. The rejection of the 200 daily moving average was, perfect. And I even wrote to analysis yesterday that yes, we saw a strong rebound, we saw follow through from the Morningstar formation, but we cannot change our bearish bias as long as we trade below 134. That's actually what I wrote in analysis yesterday. And as you see, that's the case. I mean, you might see something, you might see an element that scares you a little bit, that this clean Morningstar formation and the follow through. But you need to keep things in context. We still have the 200 EMA to scale, and most importantly, 134. So, you should put the signals in the right order. What I mean is the following. Shorter term signals like candlesticks, less important. Clean patterns and clean levels, more important. Bigger patterns and textbook formations, even more important. So when something breaks the mix that is less important than something else, you should be cautious, because obviously you always want everything to align, but you cannot have alignment at all times. So when the alignment breaks, you have to have a clear rule of what is more important. And that's why in this case I judged as more important the fact that we might not have the candlestick formation that would inspire us for a continuation lower, but everything else was still pointing lower. And this is one of the reasons that I also took the USD NOK short, because I also like the candlestick that I saw there. It reacted better. Yesterday we had a strong day in USD CAD while we had a failure in USD NOK. But if I really believed that USD CAD was bullish, trust me, I wouldn't trade USD NOK to the downside. You know what I mean, Dale?
So you're a natural teacher. I think that what you're saying really kind of applies to significance of time frame. So your monthly look is your most important look.
Of course.
And then you drill down to weekly, daily, and then intraday. So I think that's what you're saying is that. But you shouldn't just use a microscope unless you're just a scalper day trader. But if you want to swing or position trade, you need a telescope too.
Exactly. Absolutely. Absolutely.
Okay. All right, Steve, I'm going to take a quick 5-minute break. And
sure. Anyhow, we have questions that we can look at. Pound Kiwi. First of all, let me.
I'll be back to interview our guest.
Interview. Yes.
Anna Kogan Nasser. Looking forward to it. I see Anna in the house, so stand by, Anna.
I'm looking forward to hearing her interview as well. Okay, let's go to Aussie Yen and Kiwi Yen. Both of them. Okay. First of all, nothing new. Actually, no, that's untrue. I said we had a look at the Kiwi Yen, I think either 2 or 3 days ago. So it was either when we were here or when we were here. And I said that, yes, we might get rejected from here, but for me, there is at least one more move missing. And I said that from an Elliott wave perspective as well. So what I see here is this. If this proves to be a triangle, I think that what I said 2 days ago now has even more impact, more validity. If I had to choose what the next move is going to be here, is higher. Now the question is, my answer was, keeping an eye on the short term. Keeping an eye on the longer term, I would still be bullish from here, because I consider this move an impulsive move here. I consider this move a corrective move here, because I can even count the waves. It's a double zigzag. But on the other hand, this move higher might also be an A, B, and 5 waves up. It can also prove to be a 3-wave move. So what does that leave us with? A triangle, a larger triangle, I mean, something like this. So I will tell you something. Next move I foresee is higher, and then some kind of a failure and a bigger move lower to at least 79. But I want to see how this evolves to make decisions for the longer term. Bottom line, in the medium term, things are more mixed here. In the short term, likely another move higher, not a big one, then a bigger move than the one I expect higher, lower, and we take it from there. We see the nature of the move lower and we take it from there. For example, if we see something like this, to make it very, very specific, I mean, how more specific than that, I don't know. If we see something like that, a failure and something like that, then holding and testing this move while having, let's say, an A, B, C move lower, I'm a buyer. End of story.
You'll know in a minute, Anna, when I make you presenter. You'll see.
Now, Aussie yen, probably even more mixed. This can be, I don't know, an A, B, C. I mean, this move for the time being seems to be channeling pretty nicely. I haven't even done the channel, but let's do it together here.
I'm bearish.
From what I see here, yes, gun to my head, as I've said in the past, I'm not a buyer, I'm a seller.
It couldn't even get back to the breakdown at 85.80.
Yeah.
So yeah. I think there's potential of a move, the move that we had, say, from 88 to 81 and a half.
The thing is that things are not clear about the longer term structure here.
Yeah.
They're not. So personally, I'm monitoring, and I can do technical analysis for you in these pairs. Guys,
look at the weekly. The weekly even looks weaker, Steve.
Let's have a look at it immediately. Yeah.
Hanging on by a thread.
Yeah.
And look at that last rally to 88. Pretty weak rally after that big decline. So, I mean, yeah, I guess you can't say you have a breakdown until you
take my only problem here, Dale, is that this move higher is impulsive. So that means that we have at least one leg higher. Descending channel.
Another leg.
Look at it. 1, 2, 3, 4,
okay.
And then ending diagonal for 5.
Okay. So,
or actually,
that's bearish.
I see an alternative interpretation as well. I'll have a better look and let you know. Actually, I want to check this with Grega, because I also see an alternative count here. For sure, though, I can tell you one thing. At the moment, I would not be long Aussie yen after the rejection we got from here. And actually, if you had noticed the channel up here and the rejection, that would have been a lovely short with a great risk reward above the highs.
Right.
Okay. Perfect.
Okay,
so have a wonderful interview, and whatever else is left from questions, of course, as always, we're going to go over them tomorrow. So enjoy the interview, guys and girls. Thank you.
Thank you for your great insights today. Once again, Steve, my co-anchor.
My pleasure.
Anna, I've now made you the presenter. I'm looking forward to hearing your voice, and you'll see a screen share option there as well.
Hi.
There's a
Can
screen.
You hear me?
I can, Anna. Gosh, it's very nice to meet you. Very nice to meet you. Thank you. Yeah, thank you so much for coming here. And a lot of people they fear public speaking almost as much as death. So, thank
I'm not particularly a fan of public speaking, but I can do it, I guess.
Okay, so what I like to do, and I went to look at your Twitter handle and so forth, but to me what's very interesting is hearing about someone's journey into trading and how it happened, and who opened the door. Did you have mentors? Was there a book that had a major influence on you? So why don't we step into a time machine and tell me how your trading journey began.
So basically, my parents emigrated from Russia to the Netherlands when I was like 10 years old. So I came to the West and I saw basically that if you don't make it and you don't become rich in the West, you're an idiot because the opportunity is endless, right? So how do you become rich? I figured you have to be a trader. So when I was in uni, I took a 115% mortgage on a flat, which you could do back in the day, and I started punting Euro stocks futures.
Okay.
And yeah, clearly there's varied results. But then I told this to a guy who used to work at Lehman Brothers at a drinks session, and he said, okay, come over for an interview. So I got an internship there, and then I got a job. And I've been trading. I started trading credit default swaps and bonds there. That was in 2006. And I was there till the bankruptcy, obviously. I loved it, great time. And then I moved to another bank, and in 2010 I said I want to trade these sovereign CDS things because they look interesting, because from the financial institutions the debt has to go somewhere. Where does it go? It goes to the sovereigns. So I basically wanted to be short all these credits in Europe. And that's what I did. Lots of fun, lots of tough times because they wouldn't puke immediately. They would just cause a lot of brain damage for a while, but eventually they puked. I held on and made decent money. And before they puked, I was in a bit of thinking, am I going to hold on to them? They keep rallying back, all this bailout talk, but eventually I said, let me just go spend some money. So I started this animal welfare charity. And it turned out okay. The Greece defaulted. Greece CDS paid out. And I basically... What?
Congratulations. Yeah. And what a fortuitous route you took. You know, a lot of people, Anna, they go to the internet, and we know how many barracudas and sharks there are out there. You know, everyone has, they say that they'll teach you the secret of trading. I believe there is no secret. It's hard work and persistence. Do you agree with me?
No, you have to be stubborn yourself, yeah.
Yeah, you really have to. Jake Bernstein calls it stick-to-itiveness. So great background. You know, you're kind of a testament that it really only takes one move for you to make a breakthrough and then have...
Yeah, but it's just like the start of the story, because I could trade, but I could trade fundamentals then, but then in 2014, after they banned this sovereign CDS shorting, this market pretty much died. There was literally nothing to do. And I was pretty bored, so I said, okay, I'm going to just quit and do my own thing and help my charity develop and trade for myself. And that's what I did.
So how did you teach yourself technical analysis? You know, I see you have candlesticks here, and I see there's some pivots.
It's not the hard bit. The hard bit was basically I started too big because I was used to trading big size in the bank, and when you start at home, you're like, okay, you think you can easily lose 3-4K a day, but if you do it, actually you can't. So I started too big. I had these wild swings in P&L, and before I really got accepting the size that I can tolerate with my own money, everything else was kind of useless. And also figure out what am I going to do. But technical analysis is not really hard. In the end, it's trading. Whatever you do, it boils down to the same thing, which is you have to take advantage of pain, look for pain in the counterparty, right? So extreme points. And
so that's an important element in your trading decision is, you know, what's the positioning in the market and who's vulnerable, kind of like where are all the stops.
Yeah, you can see that in the price action as well, and in the technical analysis and various. But basically, I trade two books for myself, and then a longer term and a short term, and I trade for a fund now where I started literally months ago, and I'm doing top money there, but client money if everything's fine in about 2 months. So the longer term is basically I look at key areas of interest. First, for me, the most important is risk reward. Is there space to move? So currently in equities, I'd say risk reward is to the downside, and then I would do some kind of price action.
Okay, so you're looking at DAX as a proxy for potential correction in equity prices after tremendous.
Well, the thing is, why I like DAX as a short is because since all this year it's been all good news Europe-wise, and money has been going into continental Europe, and
yes.
when and if stuff sells off, it doesn't matter fundamentally what's right or not, if it's U.S. news or whatever, but they'll dump the European stuff, the one they're long, right?
Yes.
So,
actually, my work shows the FTSE showing more relative weakness than the DAX.
Yeah,
but,
yeah. I'm looking at the FTSE as well, absolutely.
Well, let me ask you this. What's that yellow line at the bottom of your top chart? What does it mean? What is that indicating?
Yeah, that's just the ATR.
Oh, I see. Okay.
I mean, for charting, I mean, I look at MT4, and I have this other thing. Where is this? I look at that trading view, so I have charts all over.
Okay.
Interactive Brokers is not really good for charts.
Okay. So if you want to go to instruments that you think there's some nice potential setups and what you're looking at, that would be great if you wanted to share a few with us.
Yeah, so on the euro that you guys were discussing, I think I'm with Blake on this one, that we kind of, the reason being is that move from 104 to here,
yeah,
in euro, that basically has been a reduction of European risk. A French election gone well, all the elections gone well, and I think there are still people short the euro, and this move is, I mean, they still need to be taken out. So in a correct move, in a proper move, the pullbacks are very shallow, especially here. They don't let you in. So I'm long, and I'm going to be buying if it drops a bit more as well.
Okay. So that's a clear view. And the rationale, I think Blake put out an article that all the banks were saying everything coming into the euro the last week or so was on the sell side. So you have a lot of shorts in there. You're going to have to run for cover over 112 or so, right?
Yeah.
Okay.
I mean, Aussie I just bought some for scalp just here. I mean, approaching 200 DMA, but I mean, it's just literally a short-term scalp, nothing. I like it higher. I think the main view is as long as the dollar hasn't broken up through this box here, it's really still downtrend and not much else to do, then keep being short the dollar as far as I see it.
Okay. Let me ask you this. I see different time frames. Do you initially look at longer term time frames like the dailies before you break it down and drill down into shorter TFs?
Yeah, I look at daily, my weekly analysis, and every day I look at multiple time frames, but I look at daily, and then I usually execute on the hourly, but if sometimes I'll look on the 15-minute for breakout moves.
Okay. So yeah, the 15-minute you could really nail down a tight entry. What's your, say, average risk per entry on a currency trade? And I know they all have different ATRs, but and do you have a formula for looking for a certain amount of risk to reward, or you're not interested?
Yeah, so in my longer term swings, so swings that I would hold, let's say oil, I'd hold like 10 days or 5 days, or, I mean, depends. I always want to hold longer, but sometimes in this choppy summer, there's nothing really to hold. I would say that's 2%, and then the short-term account where I basically trade more intraday if there's activity, and if there's no activity, then nothing. So that's between 0.5 and 1%.
So someone's asking for your Darwin X handle. Do you have a Darwin X handle?
Yeah, I do. I recently got this Darwin thing because before my account had DAX trades in it, and their system couldn't process me into a Darwin because of the DAX trades, because it has funky closing. But my handle is, I'll tell you, where's this thing? AKL.
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 I think that's a AKL?
Yeah.
Okay, that sounds like a rapper in the U.S. Okay, so looking at this, your view is, do you have a view on interest rates? We've got a pretty good bond rally. I would assume with you looking for a weaker dollar, you think a weaker dollar is going to be accompanied by a continuation move down in yields and up in bond prices, including the bond?
It should, but I don't like to do this kind of predictions on fundamental stuff.
Okay.
I do understand the dynamics, but I don't think I'm gonna have any special insight, and stuff can move like it shouldn't. Okay. I mean, bonds, I wouldn't be long here. Bonds, I'm waiting for a reversal short, but it's not there yet.
Yeah, I was thinking about 130 in the TLT, which I use for. That would have retraced the whole decline in bond prices and rise in yields from the U.S. election up around 130 TLT. Just a number. It's just another number, Anna.
Yeah, we'll get there. We really need some news or something to get people out of a flux, because it's summer markets, right? So no one is really gonna commit any serious money to anything
until after Labor Day, and then the adults come back from the Hamptons and everywhere else. So maybe this summer it'll be different, Anna. A lot of yeah. So what would you say is the most important thing that you could pass on to somebody who is a retail trader? I've interviewed Jack Schwager, and his quote was, "Find a trading style that fits your personality." You have a maxim like that you could share with our community?
Well, I don't like quotes and stuff. I'm not a fan of, but that's of course great. You need to find that. But for me, the most valuable, I'd say, extreme self-awareness. So if you have to talk to yourself, you need to know when you're about to mess up, and when you're basically when you're following the price, or when you're following your own emotions. So I literally have a personal diary where I write non-market stuff when I'm like, what's happening in the market. So I ask myself questions. I'm like my own shrink all the time, pretty much.
Yeah. And, okay. So NLP says write things down, and they have more impact than if you just think them.
Write thoughts, and the more descriptive you can be about why you want to do something or why you did something, the better insight you'll have. So in the time where that's how you get to know yourself, that's how you get to know your strengths and weaknesses, basically.
Okay, so we started with DAX. What's your view here? You short DAX, or are you looking for another high?
I'm short, and I mean, the thing is, if you want to have a runner, or you have to, like, you have these failures here, right? So all these failures, I short them now if it doesn't have any traction, I'll buy some back, but I'll always keep some core short on because I never know when this thing breaks.
Well, interesting you say core. So, you know, people say to be there for the good times, you have to be there all the time, but you also trade around your positions and take partial profits when things are working. Yeah, okay.
I'll always take partial profits. Like some people are against it, but when I take my 1/3 of position off after I make like 1.5 hour, you feel much better, and then you can actually let it go. Yes.
Okay, it's great. It takes the pressure off, and you're in a win-win position. You're not in as heavy, but if it still goes, you're there. Then people that are all in, all out. Do you also scale in?
No, I don't scale in.
Okay, you only scale out.
Yeah.
Interesting. Okay. Any other instruments that are on your radar screen?
So I'm long the ruble, short the ruble, long dollar ruble.
Oh yeah, Steve
I
Alge
took partials on this yesterday, but I do like it. I like it a lot because clearly I'm Russian, and I really do think it's a mess of a country, and it's only going to get worse in the near term. But
because of oil prices, or because of what's happening in the Middle East, or because of what's happening in the relationship between the U.S. and Russia?
No, because of oil, because the relationships between U.S. and Russia are not going to be as good as people thought with Trump coming in, because Russia society is completely disintegrating, and
why is he so popular then? Why does he get these popularity readings?
Because he shut down, I mean, it's a peasant mentality that people need to work through the communist times. They need a Tsar, they need a god to follow, you know.
The strong man, like Trump.
Yeah, but it's all an illusion. It's all bullshit.
So okay. I tell you what, you are like a glass of cool water, Anna. I'm really so glad I invited you, and I could tell that you're proficient at what you do, but I want to show where your heart really is, where my heart really is, because, you know, I say that trading is what we do, not who we are. You agree with me on that?
I do, yeah.
Okay, so I'm showing your website on your charity, and
I see. Thank you.
And I know all the ForexAnalytix team. They're all dog lovers. They all have, you know, multiple dogs. I lost mine last week, about a week ago at this time, and I'll tell you what, Anna, they sure can find a place in a person's heart that even people can't touch. So why don't you tell us a little bit about this? It's not, your coverage is global. Russian abuser,
well, no,
what's happening in Africa. Go ahead.
The thing is that it's mostly Soviet, ex-Soviet countries, right? Because after communism ended, the human laws kind of got put in place, badly, but still. But the animal laws are in a complete mess, and you can find all kinds of things there that you don't find. You could find here in the 17th century, like bear baiting, cat cementing, like lots of poisoning. Lots of children get killed by stray dogs, and then the stray dogs get attacked by vigilantes. It's basically a barbaric situation for a country that actually has resources and is relatively, let's say, developed. So I went in there and I saw this, and like, who's doing what? Is WWF doing something? Is PETA there? Is anyone doing anything in terms of humane education or legislation? Basically, no one's doing anything. Everyone is just saving random cats and dogs, but not doing anything proper, like talking to the government, telling the government what they need to do. And so I started this and with one paid employee, and then got a lot of volunteers, and now we're growing. We're going to have a full rebranding soon. We got some good supporters who are very keen. Next year we might start the building of the first, literally the first in this big country, wildlife shelter for wild animals, so bears, lions, and all of that.
I want that doggy. So let me ask you this. Do you think that people who have lost pets should wait a certain amount of time? You know, a lot of people like, I'm probably asking this for me. I am asking this for me. Yeah. Before they go out and adopt another pet, so that they're not just looking to replace something you can't replace anyway. I've had several dogs in my lifetime, and it's amazing how you can love, just like you could love more than one person, or perhaps in your, perhaps even romantically, maybe you've loved more than one man. I've loved more than one woman. But do you think there's a waiting period before you should
basically my cat died, and I was very sad. But my thoughts on this are like this: I have a great home I can offer a animal from a shelter, so it doesn't matter if I'm sad or not. I just teamed into a shelter within like 3 weeks, and I got a new cat.
Okay. Anna, I'm so glad that I reached out to you on Twitter. I think that people could learn a lot from you, but you don't even have an axe to grind. Most of the people that I interview, they want to teach people how to trade, or they have a signal service. You have nothing like that, do you?
I have nothing, and I have no time to do any of that.
Okay, so I would recommend that people donate to Anna's charity for her giving her time to our community, and also recommend that they follow you on Twitter. And I'm proud to call you my trading warrior sister, Anna. Very nice meeting. Very nice meeting you, and thank you for your time today.
Take care. Thank you.
All right, everybody. Bye-bye. Hope everyone enjoyed Anna Kozin-Nasser. She's very, you could tell that she has a lot of confidence in everything that she does in the markets, and has the mind of a trader, spirit of a warrior, and heart of a lion, and even protecting lions. So everyone, I hope you have a great afternoon, a great evening. Remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow. Thank you, Steve Volge, for your excellent analysis today. Thank you, Blake Morrow, for your always good analysis every day. And thank you, Face, for your contributions. See everyone tomorrow. Adios.